Imagine it's 2009. The global economy is struggling to recover from a devastating financial crisis. People have lost trust in traditional banking systems, with governments bailing out financial institutions while individuals suffer the consequences. Amid this chaos, an anonymous figure, or perhaps a group, using the pseudonym Satoshi Nakamoto, introduces a groundbreaking concept, Bitcoin. Presented through a simple white paper titled Bitcoin, a peer-to-peer electronic cash system, this digital currency was more than a technical innovation. It was a glimpse into the future of money. Bitcoin started quietly, used primarily by tech enthusiasts and early adopters. But today, over a decade later, it has captured global attention and earned the nickname digital gold. It promises a world where financial systems operate transparently, securely, and without intermediaries. But why exactly is Bitcoin considered digital gold, and how has it managed to gain such significance? What is Bitcoin? At its most basic level, Bitcoin is a digital currency that enables transactions between people without relying on banks, governments, or other financial institutions. What sets Bitcoin apart is its foundation, blockchain technology. Imagine a massive digital spreadsheet, accessible to everyone, that records every transaction ever made using Bitcoin. This spreadsheet isn't housed in a single server or controlled by one entity. It's spread across thousands of computers worldwide, forming a decentralized network. Here's the beauty of decentralization. It ensures security, transparency, and immutability. When you send Bitcoin, the transaction is verified by multiple participants in the network, called miners. Once verified, it's permanently recorded in the blockchain. There's no room for fraud, no space for manipulation. One of Bitcoin's most defining features is its fixed supply. Unlike traditional currencies, which can be printed endlessly by governments, Bitcoin has a limit. Only 21 million will ever exist. This scarcity mirrors precious commodities like gold and makes Bitcoin an attractive option for those seeking long-term value storage. Why is Bitcoin called digital gold? The comparison between Bitcoin and gold isn't just about their value, it's about their similarities in function. Gold has historically been considered the ultimate store of value, a tangible asset people turn to during economic uncertainty. Bitcoin shares this role in the digital era. First, there's scarcity. Just as the Earth's gold supply is limited, Bitcoin's capped production ensures its rarity. Every 40 years, an event called the halving reduces the number of Bitcoins that miners can earn as a reward, making Bitcoin increasingly harder to obtain over time. Then there's the idea of decentralization. Gold isn't controlled by any one nation or institution, and neither is Bitcoin. Its network spans the globe, immune to the influence of a single government or authority. This decentralized nature gives Bitcoin resilience, even in times of political or economic turmoil. Finally, Bitcoin and gold are both seen as hedges against inflation. When governments print more money, the value of traditional currencies decreases. But Bitcoin, with its limited supply, cannot be devalued in the same way. While gold has provided this stability for centuries, Bitcoin is rapidly gaining favor as the 21st century equivalent, offering not only these traditional advantages, but also the benefits of instant global accessibility. Bitcoin's impact on the world. Bitcoin isn't just a technical or financial innovation, it's a societal one. In parts of the world where banking systems are underdeveloped or inaccessible, Bitcoin is providing an alternative. All you need is an internet connection, and you can send and receive money. No bank required. This is life-changing for millions who have been excluded from traditional financial systems. Beyond financial inclusion, Bitcoin has created new investment opportunities. For many years, it was dismissed as a speculative bubble, but its growth has proven skeptics wrong. Today, institutional investors, companies, and even governments are recognizing Bitcoin's value. Companies like Tesla and MicroStrategy have added Bitcoin to their balance sheets, treating it as a reliable store of value and even a currency of the future. And let's not overlook the broader implications of the blockchain technology that powers Bitcoin. Blockchain has inspired innovations far beyond cryptocurrency. From supply chain transparency to secure voting systems, the underlying technology is transforming industries worldwide. Bitcoin, in this sense, is not just a currency, it's a trailblazer. Challenges and criticisms. Despite its promise, Bitcoin isn't without challenges. One of the most common criticisms is its volatility. Its price can swing dramatically within hours, making it difficult for many to trust as a stable store of value or currency for daily transactions. Another major hurdle is regulation. Governments are still figuring out how to approach Bitcoin. While some, like El Salvador, have embraced it as legal tender, others have cracked down on its use, citing concerns over money laundering, tax evasion, and criminal activity. The lack of clear, consistent regulations makes Bitcoin's future somewhat uncertain in many regions. Environmental impact is another pressing issue. Bitcoin mining, the process of verifying and recording transactions, requires immense computational power and consequently vast amounts of energy. Critics argue that this process contributes to climate change, while proponents are exploring ways to make Bitcoin mining more sustainable, such as using renewable energy sources. Despite these challenges, Bitcoin has shown a remarkable ability to adapt and grow. It's worth remembering that every innovation faces skepticism and growing pains before gaining acceptance. Why Bitcoin matters. Bitcoin isn't just an asset, it's a movement. At its core, Bitcoin represents freedom from centralized control, freedom to transact without barriers, and freedom to participate in a global economy. It challenges the status quo, asking people to imagine a world where money is governed by mathematics and technology, rather than politics and human error. For skeptics, Bitcoin may seem like a risky experiment. For believers, it's a revolution, a tool that puts power back into the hands of the people. Its growth over the last decade has proven its resilience, and its impact is only beginning to be fully understood. Looking ahead, what does the future hold for Bitcoin? While nobody can predict with certainty, its trajectory seems promising. As more people understand and trust the technology, Bitcoin is becoming a legitimate alternative to traditional financial systems. New solutions are emerging to address its environmental concerns, such as greener mining practices and second-layer technologies like the Lightning Network, which enables faster, cheaper transactions. Bitcoin also serves as inspiration for new financial models. It has paved the way for thousands of other cryptocurrencies, some of which are designed to solve specific problems in industries ranging from healthcare to entertainment. More importantly, Bitcoin is pushing the global conversation about money and value. It has forced banks, governments, and corporations to reconsider their roles in a world where individuals can hold, transfer, and store wealth independently. Bitcoin is much more than a digital currency. It's a new way of thinking about money and trust. Its journey from an obscure concept to a global phenomenon has been nothing short of remarkable. And while it still faces challenges, its influence continues to grow, challenging traditional systems and inspiring innovation across the world. Whether you see Bitcoin as an investment, a technological marvel, or a symbol of financial freedom, one thing is certain: it's here to stay. Its role in shaping the future of money is just beginning, and its story is one that will undoubtedly continue to unfold for generations to come.